Hi everyone, this is Ali Hussein Kasim of Ali Talks Tech. In this week's weekly roundup of tech news across Africa and beyond, we're covering 4 or 5 key stories. First, I want to talk about and when I say our, I mean the Association of Fintechs in Kenya in partnership with Kenya Bankers Association and FSD Kenya. I want to talk about our open finance project in Kenya. Secondly, I will delve into China's leap into the dark future. China apparently has dark factories actually operating at scale. And we shall talk about what dark factories are in a minute. Then I'll delve into Binance's $2 billion investment from Abu Dhabi's sovereign fund, MGX. We'll then speak to the National Bank of Kenya acquisition by Access Bank from Nigeria and have an interesting conversation around that. Last but not least, we'll talk about NCBA Bank's digital transformation that is fueling their 2024 success and beyond, hopefully. So let's delve into our open finance project that has been ongoing for the last 3 to 4 months. So the team are the Association of Fintechs in Kenya, where I am the chair, has been working with 2 partners, FSD Kenya and Kenya Bankers Association, to help sort of create a conversational framework around open finance. So what is open finance? So let's start there. And so that I am precise, let me read you the dictionary definition, financial dictionary definition of open finance. Open finance is an advanced financial framework that extends the principles of open banking to a wider range of financial services, including insurance, investments, pensions, and loans. It allows consumers to securely share their financial data. This is critical here. To securely share their financial data with authorized third-party providers through APIs, enabling greater innovation, competition, and personalized financial solutions while ensuring consumer empowerment and data protection. So what's this project all about? Basically, what the 3 organizations did last year, they came together and said, let's help have these conversations around open finance. And today we had our workshop in Nairobi. Some of the conversations and the key takeaways from this engagement that went on most of the day today is that 1, open finance fosters innovation and collaboration. It transforms or hopes or promises to transform financial services. 2, consumers must have control over their data to build trust and drive adoption. Now, this is important. This whole issue around data and my data, and I recall one of the conversations we had today morning was about somebody said, oh, but somebody owns a customer, so somebody will steal that customer. I'm like, guys, what nonsense is this? Who owns me as a customer? Who owns me? This is 2025. The notion that an organization or a company owns a customer is so antiquated, so I don't even know where to start. So let me just put it out here in the open right now. How many companies offer me similar services or services that are related? I am a Google client. I'm a Facebook client. I'm a LinkedIn client. I'm an NCBA client. I'm a KCB client. I'm a Safaricom client. Who owns me? Come on, guys. For as long as you are providing me a valuable service, I will continue to engage with you. And guess what? When I feel that you have not provided me with a valuable service, I stop being your customer. It's as simple as that. It's not complicated. It's not rocket science. So this notion of, oh, this is my client, this is my customer, this is going to go. And guys, here's the thing. Whether we like it or not, we already are in a de facto open finance environment. We already are. It's just an issue of formalizing it. It's an issue of getting people to understand and appreciate that provide value. You will get my custom. You don't provide value. It's as simple as that. I walk. One of the basic critical principles, and I know this scares a lot of brands, especially in financial services. Clear standards and oversight are needed to ensure ethical practices and fair competition. Industry players must collaborate to enhance financial openness and wellness. So, today's conversations were robust and they were super, super interesting. The key highlights. Number one, consumer-led data sharing to empower users. The customer here is at the center. And I know this scares brands again. Simplified provider access with consumer-driven control. Last but not least, the need for strong oversight to provide or to prevent unethical practices like screen scraping. A huge thanks to everybody who has been at the forefront of this engagement. This engagement continues. Today was a workshop to collate and bring all this information together. Special mention to FSD Kenya, Kenya Bankers Association, and to my colleagues led by Rosemary Kimwatu, who is our chair of the Policy and Regulatory Committee. Asanteni sana. Now we move to China's leap into the future. Dark factories. What are dark factories? First, simply put, these are factories that operate, as the name implies, in complete darkness. You don't need lights. Because these factories are operated, wait for it, 100% by AI-enabled robots. Welcome to the future, ladies and gentlemen. And China is leading this space. These factories are using robotics, artificial intelligence, IoT, 5G, and so on and so forth. Why is this important? Why am I raising this here? First, you're talking about 24/7 operations, minimal errors, maximum output. So out of all these terminologies like zero defect, CGI, Six Sigma, and stuff like that, that's out of the window, guys, as far as these factories are concerned. Cost savings, huge cost savings. And of course, China is now a leader in this space. These are the key players. Foxconn, which is a contract manufacturer that is used by many brands across the world, including Google, Apple, and some of the biggest brands. They have replaced 60,000 workers with robots. Show me a Chinese player produces 1 million smartphones annually through dark factories. Media automates 30% of global AC production. 30% of all air conditioning units are produced by media, which largely uses dark factories. Obviously, there are major concerns, guys. job losses, millions of workers at risk. Cybersecurity threats, all these super automated systems can be hacked and bring to a stop a big portion of global supply chains. Last but not least, supply chain disruptions. This is basically reshaping global production. Now, I was speaking to a friend of mine, a colleague of mine in Ethiopia, and he was telling me, look, Ali, I don't know what to say. I'm shocked at this whole conversation. Because here in Ethiopia, we've been talking and thinking about how we can get some of the work from China to come here. All of a sudden, even before we've started, we have been completely disrupted. As we like to say in Nairobi, habari ndio hiyo, guys. I move to the next story in my weekly roundup today, which is Binance. Binance secures $2 billion from Abu Dhabi's sovereign fund. Sovereign fund simply basically means that the country or the country's government has a venture fund for long-term investment in different sectors of the economy. So Binance is the largest crypto exchange in the world, controls slightly over 40% of all crypto transactions in the world. Last year, $23 billion in revenue. So you're asking yourself, why exactly does Binance need $2 billion from a sovereign fund? They have just 3 months ago reported $23 billion in revenue. Obviously, the money will come in handy for sure, but that's not, in my humble opinion, that's not the key reason why Binance has accepted this money. My sense, I have this sneaky feeling, is that Binance is starting to appreciate and understand that policymakers and regulators the world over have zeroed in on the crypto market. It's simple. Binance wants to ensure that they have a say, they have a seat at the table when it comes to crypto regulation and crypto policy. And where else to start but one of the most important economies and governments in the Middle East and Eastern Central Asia. We have to take this into perspective because Binance has had some serious problems when it comes to policymakers and regulators the world over. They are still fighting an $81 billion lawsuit from none other than the Nigerian government. The Nigerian government is accusing them of all sorts of wrongdoing when it comes to the Nigerian economy. So this is one way of telling policymakers and regulators, we appreciate that you guys neither move fast nor break things. So here we are on the table, we are at the table with you guys, let's talk. I now come to my other story about National Bank's sale to Access Bank, which has since faced major hurdles with two central banks, their home central bank, which is the Nigerian Central Bank, specifically giving them some conditions to meet. Apparently, Access Bank has been having issues in DRC. They have a fully owned subsidiary in DRC. It's facing some liquidity issues. It's facing issues. I mean, DRC is not a tough. It's a tough market. Yeah, it has solid local banks and Eastern African banks like Equity Bank and KCB. Now, it's interesting to note that Nigerian banks are one of the most adventurous banks across Africa. That's for sure. But beyond West Africa, they don't seem to really have hit mainstream. They are playing at tier 3 level banking. I think Access Bank is just saying, you know what, guys, we've had enough of this. We need to get into mainstream tier 2, tier 3 banking. And hence the reason for the acquisition or the potential acquisition of National Bank. Now, this roadblock. That's the Central Bank of Nigeria. The Kenyan Central Bank has said, wait a minute, we need some assurances that employees will remain for the next 24 hours, for the next 12 to 24 months. That's causing a bit of so here's to wishing Access Bank all the best, and here's to alerting anybody, Africans included, that the financial services market in Africa is not necessarily fragmented, because Africa is not one country, it's a continent. But you need to navigate across a myriad of countries. And that goes to show that we have a long way to go, and that there is need for political will to harmonize lots of regulation and policies across financial services and fintech and so on and so forth. My last story is on KCB again, because just to step back a bit on that story, Access Bank is acquiring National Bank from KCB. KCB got into an arrangement a couple of years ago to rescue National Bank by the Central Bank of Kenya. Now, KCB wants to offload National Bank. So back to KCB. KCB's financial year report for 2024 is a masterclass in digital transformation. Super interesting. Let me read you some key statistics. Digital growth highlights: 1.1 billion shilling disbursed daily via mobile lending, 407 billion in mobile loans for the year. That's 25% growth. 332 billion disbursed to 11 million customers through digital channels. The branch digital synergy. Branches handle advisory and complex transactions. So this is basically dual transformation. Digital channels manage high volume transactions. KCB Vuma integrates payments, savings, and lendings. Not so sure about how well KCB has done in terms of Vuma traction. I don't think they've broken those numbers. It will be interesting for them to break those numbers for us going on. Key innovations. Unified group mobile banking. As I said, I'm here to test it, looking forward to testing it so that I can give you guys some serious feedback. KCB Mobi for payments, loans, and more. And then they have this partnership with a tech company called SPS, which is helping them transform the bank in terms of digital capabilities. Last but not least, what's the impact of this transformation? 77% growth in mobile loan value, 78% rise in non-funded income from digital channels. This is crucial, guys. Non-funded income simply means income that is not interest-driven. Mobile transactions are up 36%. That's interesting. So, there you have it, guys. Looking forward to more conversations next week. Asanteni sana.